What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is we're going to be thinking about the concept and what we need to see in order to get back to the points where we could potentially see those margin calls and forced liquidations that we saw back in June. Now, I know a lot of people are really excited about this next price movement to the upside. So we're going to go over exactly what I am seeing right now and exactly what we need to see happen, not only in the ape community, but overall in the market, in order for us to be allowed to get back up to those levels and put a lot of pressure on these shorting institutions. Now, we're going to be taking a look at this Ortex data as well, the option chain, and we also have to take a look at this new development where the SEC is investigating Citadel over some of its business practices. This is a really good step in the right direction, and I think with what we've been seeing out of the SEC over the last couple of weeks and months, they are working to get some things done in terms of making our broad market more fair. But again, we haven't really seen anything out of them yet in order for us to really get a good understanding of what they're doing, and then we could make our opinion. So before we could get into all of that information, if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button. So in order to take a look at what we're going to need to see in order for those potential margin calls, which again, you are never ever going to see a news article that says margin call happened. What we have to do is base that essentially assumption off of the price action that we are seeing. And again, remember, a margin call does not mean the forcing of the closeout of a short position. It just means that you have to add more liquidity to your account in order to keep that position open. So when we come out to this year-to-date chart here, we have to basically, when in doubt, zoom out. A lot of people like to use that term. So when we're looking at the price action, we know that AMC was getting heavily shorted for not only this year, but in the years prior as well. Then we saw this massive run up to 72. But here's really where I want to take a look at. So we ended up going on this big run, and then we had this consolidation period in the $50 range. Now, we ended up breaking below this range and then consolidating in this $30 range. Now, we have to think about the cycle of short positions. We know that some of these shorts did close out their positions on this big run up into the $70 range because a lot of these institutions are not going to have enough capital or the risk tolerance in order to keep those positions open. So shorts are coming in and getting out, but overall, we are seeing a net increase in the short interest over time just based off of the reported data, and that doesn't even include all of the different ways that you can create the counterfeit shares, the synthetic short interest, and how you can hide your existing short interest. So most likely what has happened is that a lot of these different shorts added in this $50 range. We broke down, we were chilling in this $30-something range. We ended up running back up, which honestly must have scared a lot of these shorts. And then we ended up coming back down into this $37 range. So what we're seeing here is almost like a standoff, because if those shorts were really piling in this $50 range, then they're really not facing a lot of pressure right now because their position is still in the green, or they are slightly in the red if they were one of those institutions that was trying to short on the way up. So really what we're looking at is, well, the shorts and the longs on AMC, the institutions and retail investors, are kind of in this battle of the diamond hands right now. Who is going to be able to last longer and basically force their will on the overall market? Is it going to be the shorts? In my opinion, I don't think so at all, because for us as retail investors, it costs us nothing to hold, and we have a lot of institutional backing behind us as well. But in order to put a lot of pressure on these outstanding shorts, we are going to need to see some significant price movements to the upside. Now, how are we going to get there? Well, we're going to need a lot of excitement from the ape community. We're going to need a lot of buying pressure. And what could cause this is some of the really solid catalysts that we have coming up. We know that we have a lot of new movies coming out that are supposed to be record-breaking. We've seen this many times in the past. And the kind of wild card event that we have coming up is going to be AMC's earnings in the beginning of November. And who we have on our side and supporting us, Adam Aron, the CEO of AMC, we really never know what he is going to do. Last time we had the Say Technologies vote, and we also had the announcement that AMC was looking to get into some sort of partnership agreement with GameStop. Now, what is going to happen this time? That's a lot of positive uncertainty that I think could provide a lot of bullish sentiment going forward. Now, in addition to this, when we come and take a look at Ortex, and we look at the market for returned and borrowed shares. Remember, when we were trading at those higher levels and we were seeing a lot of volatility, we would see the returned and borrowed shares almost every single day be above 5, 8, 10 million on each side. We're not really seeing that right now. So what we're looking at is the shorts really don't see a lot more downside on where AMC is trading at the current time. And we can kind of confirm this with potentially Iceberg Research if they are actually a real company closing out their shorts. So what we're seeing is, again, the market for borrowable shares is not as, I want to say, aggressive as it has been in the past. And we can also see that reflected in these cost to borrow rates and in the utilization. So right now, we also have the estimated short interest as a percentage of the free flow at about 17.65%. And again, I don't want this to freak anybody out. When we take a look at Ortex, what they're giving us is the estimates from the data that they are receiving, and then they are relaying that information to us. So they were estimating 20.7% as that short interest back around the time when the settlement date of the exchange reported interest was being finalized. So what happened is that they just overestimated what the actual short interest was. And then when the exchange came out and gave these numbers, we saw a significant drop in the estimates. But again, this does not show us any signs that the shorts are covering in any widespread fashion. Now, let's come over and take a look at the option chain for this week and refresh this page to make sure we have the most up-to-date info. So right now, we have 22,744 call contracts in the money, and we did see about a 10,000 contract increase on the call side on the out-of-the-money options. Now, again, I do want to put this disclaimer out there. If you are trading options on AMC right now, be very, very careful. Options are incredibly risky, and I want everybody to be fully aware with the risk because the vast majority of options contracts do expire worthless, and I don't want to see anybody lose money. Now, let's get into this situation with this SEC investigation into Citadel's business practices that has kind of been spreading like wildfire around the internet today. So when we come over to this screenshot right here from Fox Business, sources, SEC has launched inquiry into Citadel that targets parts of its business model. Now, what this is most likely referring to is payment for order flow, because that is a really substantial part of Citadel's business model at the current time. And in my opinion, it doesn't really matter what Ken Griffin says about payment for order flow being an expense to him at the current time. If the New York Stock Exchange and all of these other exchanges are creating more incentives to send these orders directly to these lit exchanges, if payment for order flow goes away, these brokers are going to have much less of an incentive to send this order flow directly to the market makers. So what we're seeing here is a really solid step in the right direction. But what we also have to keep in mind is that we really have not seen anything concrete yet. A lot of people are very for the SEC and are really excited about what we have going forward, of what they could potentially be doing in terms of trying to make our market more fair. And a lot of people on the other side are saying, well, they haven't done anything yet. The SEC needs to get off their behinds and really do something about this. So both sides, I think, have really good arguments, but what you have to keep in mind is these things are going to take time. But the fact that the apes in the ape community over the last 9 months has been outspoken enough to get the attention of all of these regulatory bodies that they are actually now looking into these different business practices that are most likely very unfair and manipulative towards the way our market works, I think is an unbelievable step in the right direction. And when we're thinking about the whole ape movement, yeah, we all really want to make a bunch of money on this, but when you look at what the core values of the ape community are, we really just want a fair market for everybody, and we want everybody to play by the same rules. So that is really going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.